Tonight, in the next few hours, the pieces are moving on the board. While you're not watching, I'm seeing signals in Asian order flow that suggest tomorrow could be explosive either direction. The same patterns that preceded the February 12th flash crash, the same positioning mechanics that enable gap openings, the same thin liquidity conditions that allow manufactured moves. Something is being set up tonight for Tuesday, and if you're not ready, you could wake up to a market that's already moved without you. Before we break down exactly what's happening tonight and how to prepare for Tuesday, crystal clear as always, I will never ask for your money. No paid groups, no courses, no signal services. If anyone uses my name to sell you anything, it's a scam. Report immediately. I make these videos because overnight setups determine the next day's battlefield. This is education, not financial advice. Verify everything. Drop a comment if you're watching tonight while everyone else sleeps. The overnight setup. Let me explain exactly what happens tonight and why it matters for Tuesday. CME Globex reopens at 6 p.m. Eastern tonight. That's approximately 3 hours from now as I record this. After a full President's Day of abbreviated trading and complete shutdown, futures markets come back online. But before American futures reopen, Asian markets act first. Singapore opens while you eat dinner. Hong Kong opens while you watch evening news. Shanghai opens while you sleep. By the time you wake up Tuesday morning, Asia has already established direction. Here's what most Americans don't understand. The overnight session from 6:05 p.m. Eastern to 8:30 a.m. Eastern trades approximately 35% of daily volume. 1/3 of the trading happens while America sleeps. And it's not random trading, it's positioning. Smart money positioning for Tuesday's regular session. The institutions know retail checks prices in the morning. They know retail makes decisions after seeing the open. So they position overnight to control what retail sees at 9 a.m. I want higher prices Tuesday, bid the overnight session. Create momentum. Retail wakes up, sees green, buys more ads to institutional position, want lower prices Tuesday, sell the overnight session, create fear, retail wakes up, sees red, panic sells, institutions buy the panic. Tonight's overnight session is where Tuesday's narrative gets written. The question is what narrative they're writing, the signals I'm watching. Let me show you the specific signals I'm monitoring tonight, because these tell you which direction Tuesday is likely headed. Signal 1, Shanghai Premium Direction. Current Shanghai Premium $11 over New York price approximately $8,650 versus $7,650. If Shanghai opens tonight and Premium expands toward 12 to 13, that's aggressive Eastern buying. Physical demand intensifying, bullish signal for Tuesday. If Shanghai opens in Premium contracts toward 9:10, some pressure relieving. Physical demand moderating slightly, less bullish urgency. The Premium direction tells you whether Asian industrial buyers are urgent or patient. Urgent buyers drive prices higher globally. Signal 2, Globex opening gap. When CME Globex opens at 6 p.m. Eastern, watch the first trade versus Friday's close and today's abbreviated session close. Gap above 77 and 50 bullish Asian buying already pushing prices. Tuesday likely continues higher gap below 76 bearish selling pressure carrying from today's thin liquidity. Tuesday could test lower levels flat open, 76.50, 77 undecided, Tuesday's direction. Determined by early session action, the gap tells you what happened between sessions. It reveals positioning that occurred while U.S. markets were closed. Signal $3 index movement, DXYY, closed today, around 97 points euro elevated level, creating headwind for commodities. If DXY weakens overnight toward $96.50 selling supports commodity buying bullish for silver. If DXY strengthens toward $97.50 strength pressures. Commodities bearish for silver currency moves often lead commodity moves. Watch DXY as leading indicator. Signal 4, gold correlation. Gold currently trading around $49.50, consolidating below $5,000 psychological level. If gold breaks above $5,000 tonight, silver follows with leverage. Typically, 290 likes gold's percentage move. Bullish signal. If gold breaks below $4,900, silver follows downward with leverage. Bearish signal. Gold often leads silver. Watch the senior metal for direction clues. Signal 5, volume profile. Normal overnight volume $15,000 and 20,000 contracts. If tonight's volume exceeds 30,000 contracts, something significant happening. Large positioning underway, the move is meaningful. If volume stays below 15,000, quiet positioning. Tuesday's direction less certain from overnight action. Heavy volume validates direction. Light volume suggests false signals possible. The February 12th pattern. Let me remind you what the setup looked like before the February 12th flash crash, because I'm seeing similarities tonight. Sunday, February 9th, quiet weekend. Silver around $95. No unusual activity. Monday, February 10th, normal trading. Then at 5:15 p.m. Eastern, CME announces 18% margin increase after hours while retail wasn't watching. Tuesday, February 11th, retail wakes up to margin calls. Liquidations begin. Price drops to $91. Wednesday, February 12th, $847 AM, coordinated selling hits. Flash crash to $77.47. The pattern set up on Sunday, Monday, execution Wednesday. Where are we now? Sunday, February 15th, weekend quiet. Monday, February 16th, President's Day, thin liquidity. Price pushed to $76.50, testing. February 12th, lows tonight, Asian session positioning. Tuesday, February 17th, full trading session. First normal day since flash crash support test. The setup mirrors February 12th. That doesn't guarantee repeat, but the pattern similarity demands attention. Watch for CME announcements tonight. Any margin changes, any unusual advisories. The February 10th announcement came at 5:15 p.m. Central, that's 6:15 p.m. Eastern, right after Globex opens. If CME publishes anything unusual tonight, that's red alert for Tuesday. The $76 line in the sand, today's abbreviated session tested $76 support. Let me explain why tonight and Tuesday's action around this level matters enormously. $76 is the February 12th flash crash low. The level where massive selling exhausted, where buyers finally stepped in with enough size to absorb the cascade where the bottom was established. Today in thin President's Day liquidity, price pushed to 76 Noru 34. Testing that support, probing for weakness. The support held barely, but it held. Tonight's Asian session will test $76 again. The question, does it hold or break? If $76 holds through tonight, triple bottom confirmation, extremely bullish technical pattern, short-term traders covering shorts, they don't want to be short below confirmed support. Momentum shifts bullish. Tuesday could gap towards $78 or $80. If $76 breaks tonight, support failure. Technical damage significant. Stop losses below 76 trigger. Cascade selling begins. Next support at $72. Potential for Tuesday gap down to test that level. The 76er level is binary tonight. Hold or break. Tuesday's entire trajectory depends on which outcome occurs. This is why I'm warning you to watch tonight, not Tuesday morning when it's already decided. Tonight, when the decision is being made, the CME advisory watch. This is the most important thing to check before you sleep. CME Group advisory notices. The February 10th margin increase was published at 5:15 p.m. Central, right after markets closed, while retail was logging off for the day. By the time retail saw the announcement Wednesday morning, they were already in margin violation. Liquidations were already beginning. The trap had already sprung. Tonight carries the same risk. What to watch for? Margin requirement changes. Any increase effective Tuesday would force retail to post additional capital immediately. Same weapon as February 10th. Position limit changes. Any reduction in maximum positions would force large longs to liquidate. Selling pressure delivery rule modifications, any changes to March delivery procedures, signals exchange managing stress trading halt provisions, any warnings about potential halts, suggests extreme volatility expected. How to check? Go to CME Group website. Navigate to Advisory Notices section. Check at 6 p.m. Eastern when Globex opens. Check again at 8 p.m. Check before bed. Check when you wake up. If CME publishes anything unusual tonight, you need to know immediately. Not Tuesday morning, tonight. The margin weapon works because retail doesn't see it coming. Seeing it coming is your defense. The positioning tells. Let me explain what institutional positioning looks like in overnight sessions, because recognizing the tells helps you anticipate Tuesday accumulation pattern. Price dips slightly on light volume. Test support. Volume increases on bounces. Higher lows form. Institutions are buying dips. Building position before markup. This pattern tonight suggests Tuesday gap higher. Institutions positioned long. They want higher prices. Distribution pattern. Price rallies slightly on light volume. Tests resistance. Volume increases on drops. Lower highs form. Institutions are selling rallies. Distributing before markdown. This pattern tonight suggests Tuesday gap lower. Institutions positioned short. They want lower prices. Trap pattern. Sharp move in one direction triggers stops, reverses violently. Volume spikes on reversal. Institutions triggered stops to take the other side. This pattern tonight suggests volatility Tuesday. The overnight direction was fake out. Real move is opposite. Watch the pattern develop tonight. The first 2-3 hours of Globex often reveal institutional intention. The price action tells you what they're planning for Tuesday. The Tuesday scenarios based on tonight's setup. Let me outline Tuesday's most likely scenarios. Scenario 1, bullish breakout. Overnight action, $76 holds. Globex gaps above $77.50. Shanghai premium expands. Gold breaks $5,000. Volume heavy on buying. Tuesday morning opens above $78. First hour confirms direction. Buyers aggressive. Tuesday target 80 tires, $82 by close. Gamma squeeze potential if $80 breaks. Options hedging forces mechanical buying. Probability 40% based on current setup. Scenario 2, bearish breakdown. Overnight action, $76 breaks. Globex gaps below $75. Shanghai premium contracts slightly. Dollar strengthens volume heavy on selling. Tuesday morning opens below $75. First hour shows failed bounce attempts. Sellers aggressive. Tuesday target $72 to $73 by close. Fibonacci support test potential for capitulation selling. Probability 25% based on current setup. Scenario 3, consolidation grind. Overnight action $76 holds, but no conviction. Globex flat to slightly higher. Shanghai premium stable volume light. Tuesday morning open 7650, 7750, 50 US choppy action no. Clears throat. Clear direction. Tuesday target 779 range battle between bulls and bears. Unresolved sets up. Wednesday for decision probability 35% based on current setup. The highest probability is bullish breakout or consolidation. The setup favors higher not lower, but the bearish scenario cannot be dismissed. March delivery uncertainty creates two-way risk, the options factor. Let me explain why this week's options. Options expiration affects Tuesday and why tonight's positioning matters. February options expiration this Friday, February 20th. Current options, landscape massive call, open interest at $80 strike. Thousands of contracts significant call open interest at $85 strike. Substantial positions put open interest concentrated at $75 and $70 strikes. How this affects Tuesday. If price approaches $80 Tuesday, market makers who sold those calls must hedge. They buy futures to offset call risk. This buying pushes price higher toward $80. More hedging required, more buying. Positive feedback loop. This is gamma squeeze mechanics. The options market forces the futures market through hedging requirements. If price breaks below $75 Tuesday, market makers who sold puts must hedge. They sell futures to offset put risk. This selling pushes price lower toward $72. More hedging required, more selling. Negative feedback loop. Tonight's positioning determines which feedback loop activates Tuesday. If overnight establishes bullish momentum towards 78 on dollars, Tuesday approaches $80. Gamma squeeze potential activates. If overnight establishes bearish momentum towards $75, Tuesday threatens $72. Gamma collapse potential activates. The overnight session isn't just about price, it's about which options mechanics trigger Tuesday. The March delivery countdown. Every overnight session now occurs within context of March delivery countdown. First notice day, February 27th, 10 days away. Current March, open interest, 400 plus million ounces of paper claims. COMEX registered 98 million ounces available for delivery. Coverage ratio 4.1. How this affects tonight? Large traders with March positions are making decisions now, not February 26th. Now Stanford delivery, they're ensuring positions are properly documented, accumulating if they want more exposure. Roll to May, they're beginning the roll process. Selling March, buying May, cash settle. They're planning exit strategy, timing sales for best execution. Tonight's positioning partly reflects March delivery decisions. Large traders positioning for delivery window are acting in overnight sessions where their size is less visible. If you see heavy buying tonight, some of that is March delivery accumulation. They want physical metal. They're ensuring they get it. If you see heavy selling tonight, some of that is rolling or closing. They're exiting March exposure. The March countdown creates urgency that affects every session from now until February 27th. Tonight is no exception. Your tonight checklist. Let me give you specific actions for tonight. What to check and when 6 p.m. Eastern, Globex opens. Check CME advisory notices. Any margin changes? Any unusual announcements? Note, Globex opening price versus today's close gap direction, or check dollar index DXY direction from 97 to 08. NORs PM. Eastern should rest, or check Shanghai opening if available through data services note, Shanghai premium expanding or contracting from $11, or check Globex price action trend, developing or choppy recheck CME advisories, anything published since 6 p.m. 10 p.m. Eastern before header. Note Globex price. Where is $76 support holding or threatened? Check overnight volume heavy or light. Note gold price correlation holding. Final check CME advisories. 6 or 9 a.m. Eastern. Wake up. Earns immediately. Check CME advisories. Anything published overnight. Note Globex overnight range high and low. Check Shanghai close premium status. Assess which Tuesday scenario is developing. Set alarms if necessary. Check at these times. The information you gather tonight determines your Tuesday preparation. The physical holder advantage. Let me address those holding physical silver versus paper positions. Physical holders. Tonight doesn't require your attention. Your metal sits in your safe regardless of what happens on Globex. No overnight gap affects your holdings. No margin call threatens your position. No CME advisory changes your situation. You can watch out of interest, but tonight's action doesn't require your response. That's the physical holder advantage. Outside the paper game entirely, paper position holders, tonight matters a lot. Your futures contracts, your ETF shares, your unallocated accounts are subject to overnight moves, gap risk, margin changes, exchange rule modifications. If you're holding paper through tonight, understand you're exposed to moves you cannot respond to in real time. The overnight session happens while you sleep. By the time you wake, it's history. Consider whether that exposure is appropriate for your risk tolerance. Some traders close positions before extended closures and overnight sessions specifically to avoid uncontrollable gap risk. It's Monday evening. President's Day is ending. America is winding down for the night. But in a few hours, CME Globex opens. Asian markets take over. Shanghai establishes physical market direction. The overnight session determines Tuesday's setup. Something is being positioned tonight. The patterns mirror February 10th, 12th when the flash crash was manufactured. The thin liquidity conditions persist. The margin requirement weapon could deploy again. I'm not predicting a crash. I'm not predicting a rally. I'm warning you that tonight's session matters. That tomorrow could be explosive either direction. That the setup is happening while America sleeps. Watch the signals. Shanghai premium, Globex gap, dollar index, gold correlation, volume profile, CME advisories. Check at 6 p.m., check at 8 p.m., check at 10 p.m., check at 6 a.m. The informed survive. The unaware become liquidity. $76 is the line tonight. Tuesday's trajectory depends on whether it holds or breaks. The decision is being made in the next 12 hours. Be ready for Tuesday because Tuesday is being created tonight. Verify everything. Trust no one. Protect your capital. Until next time.